The S&P is in a very dangerous situation today as it is on the verge of losing the key support level at 4100. What's more, we see bullish signs on the 10-year yields and on the fear index VIX pointing towards a possible correction on the index. If this scenario materializes, it would be very frustrating for the bulls. Let's see in more details. My name is Nathan and you are welcome to the Finance Hydra channel. Let's start our analysis looking at the S&P index over here. Yes, we see some very good bullish indicators on the S&P. First, we did trigger this golden cross pattern over here. The 50-period moving average is breaking the 200 moving average upwards. This is a classic bullish reversal sign. What's more, we did an upwards breakout from this descending channel and we did trigger a bullish pivot point, doing a higher high, higher low in the 1-hour chart. But if we take a deeper look on the index, in the daily chart, we see that we are dangerously trading around the support level at 4100. We are slightly losing the support level right now at this moment. If we lose this support level, which was a previous resistance level, as we can see over here, as evidenced by these red circles over here, we might frustrate the bullish bias, at least in the short/mid-term, indicating a possible correction to maybe the 21 EMA, maybe the 40-15 over here. We don't know, there is no way we can tell, at least for now. And this is a quite dramatic situation because the index couldn't fill this gap at 42.18 and we are already losing momentum. If we take a look at the Nasdaq index over here, we are losing momentum after retesting a crystal clear resistance level at 12.7k over here. Right now, the Nasdaq index tech stocks are poised to correct to lower levels. In fact, the 21 EMA on the Nasdaq index is very close to the previous resistance level over here, around 12.2k. So yes, a correction is totally plausible, especially if tech stocks correct as well. And if we take a look at the 10-year yields, 10-year yields are on a bear trend, all right? Since October 2022, we see this purple trend line connecting the previous top levels. However, right now, the 10-year yields are in what I like to call a trap zone. We see a clear resistance level, this purple trend line. However, we see the 21 EMA squeezing the price between this resistance. Right now, yields are trading in a very tight zone. Eventually, we are gonna see a breakout. We just don't know if we're gonna lose the 21 EMA or if we're gonna break this purple trend line upwards. If this scenario materializes, if we take a look at the 1-hour chart, we would frustrate a possible double top chart pattern over here for good, and this is going to be quite frustrating for the bulls as well, because if we reject this double top chart pattern, if we break this purple trend line as well, the odds are that yields are going to fly to the next resistance level around 3.9%. So yes, this is a quite dramatic movement, and in this scenario, the S&P would correct a little bit sharper than usual. What's more, we see the fear index VIX trying to do an upwards breakout of a descending channel. Just like the S&P did in the weekly chart, the fear index is trying to do that in the daily chart, meaning by doing an upwards breakout from this descending channel, and if yields also break its resistance level over here, then it is going to reinforce the idea that the S&P could correct to lower levels. Regarding VIX, if we break this descending channel upwards, well, then the next possible target on the VIX is around at least $21 at least. Right now it is too soon to tell, but still we might go up a little bit higher. In this scenario, the S&P could easily retest its 21 EMA or even go a little bit downwards. Maybe the 40-15 is going to be the next support level on the S&P. In addition to that, we see many stocks doing weird movements. Look at Apple over here doing 2 bearish candlestick patterns in a row. In fact, the candlesticks bodies are almost the same. Microsoft is doing a similar movement. Google is just crashing. Amazon is already crashing, trying to lose its 21 EMA. Even Berkshire Hathaway is trying to do this weird movement of today. So yes, we see many weird signs, and if 10-year yields along with the fear index VIX both do their upwards breakout from their resistance levels, then okay, probably we're gonna see a sharper correction on the S&P index. Again, a sharper correction would take us to the 4015. However, this is not gonna be enough for the index to actually reverse the bullish sentiment, at least in the midterm, because midterm wise, well, we are still doing higher highs, higher lows, am I right? We are still doing this. Okay, so as long as we keep doing this, the index will remain in a bull trend. However, if we trigger a lower high, lower low, then okay, then this is the bearish reversal structure. If you are a bear on the index, if you believe the index shouldn't be here right now and that it has to crash, well, you should watch for a lower high, lower low on the index. If the index does that, then it is going to be a true, meaningful, bearish reversal structure. And in this scenario, I firmly believe we could seek even lower price levels. All right, maybe we could even enter this descending channel again, completely ruining the bullish bias, this bullish pivot point in the long term, and that would be extremely frustrating for the bears. If we take a look at the monthly chart, any sharper correction could take the index back to the 61.8% Fibonacci's retracement, which is the next technical target in the monthly chart if the S&P actually reverses the trend in the midterm, in the mid/long term, all right? So right now, let's pay attention to the support level at 4100. And if you're still watching this video and you are not my subscriber, come on, it is about time for you to subscribe. Click on the like button. Probably you liked the video. Why would you still be here watching me? So join the family, join the Finance Hydra channel, and of course, if you want to join the top 5% of traders that can actually make money while beating this market, check my website. The link is in the description of this video. Now back to the S&P. The most important critical key point, 4100. If the S&P loses 4100, then I firmly believe we are going to correct. I don't believe we are going to actually reverse the trend because we don't see bearish reversal structures yet. We are still above the 21 EMA, doing higher highs, higher lows, so there is no reversal yet. But the odds are that we are going to do a sharper correction in the midterm. Maybe this could be an opportunity to buy at a lower price level, or maybe this is going to trigger a true reversal sign on the index. I'm gonna keep you guys updated on the S&P. Therefore, remember to subscribe, click on the like button. Thank you very much for your audience, my dear friends. Stay safe. Farewell.